Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us now from BMO, from Bank of Montreal, BMO Capital Markets, the acclaimed Ian Lyngen. The summary here, Ian, is the following. We've got a debt and a deficit, and we're in love with T-bills. What's the Lyngen radar say about an executive branch that says the solution is a record number of T-bill issuance?
Frankly, I think that we're at the point where the market, at least for now, can easily absorb an increase in T-bill issuance. The risk is that they oversaturate the front end of the market. And there are many in the market that believe that the rise of stablecoin and demand from that sector is going to create excess demand and absorb the bills in 2026 and beyond. That's not so clear to me, but I think that the Treasury Department is going to find out soon enough.
Here's a sentence without math. One of the key debates in the market at the moment, Damien, is whether Trump's tariffs will trigger one-time price adjustments or persistent inflation. So continue with Ian Lyngen.
Well, I think all three parties take, we'll talk about that later. Ian, I got you, and I have limited time here. I mean, futures are pricing a 91% probability of a 25 big cut in September. Can it be 50? And what would make the Fed go there?
I think it could be 50. Again, not our base case, but if you get a disastrous payrolls print for the month of August and two benign CPI prints, the market will start talking about 50 basis points.
Well, I mean, but then are we really going to see a pullback in consumption? Come on now. I mean, GDP growth, I mean, better than expected globally for the first half of this year. You know, I mean, talk to me about the trade-off between a weaker labor market and resilient income growth here in the U.S.
So we have seen a easing of demand in terms of personal consumption in real terms over the course of Q1 and Q2. That's in the data. But what we haven't seen is we haven't seen it completely stall out. And frankly, if the Fed cuts 50 or 25 in September, the equity market will respond well, and that will reinforce the wealth effect, which could certainly help keep the consumer going.
Damien, end of 2023, 30-year mortgage, 8%.
Yeah.
We're now down to 6.78%. And to your great question to Ian, if we get a 50 beeps, whether it's 1, 2, whatever, I mean, that's got to save the housing market, right?
I mean, yeah. And Ian, I mean, can this curve steepen even more from where we are? I mean, I think you look at 5s, 30s, we're up, 60 bips year to date. I think 2s, 10s, it's something like 20 plus bips year to date. I mean, just how much steeper can this curve go?
So once the Fed starts cutting, the market will price in even more rate cuts in 2026 and 2027. And so the 2-year sector will rally. So you get a steeper curve that way. I don't think 10 and 30-year yields are going to back up materially from current levels. So you can still get a steepener with a front end rally. As far as mortgage rates dropping in line with each incremental quarter point cut,
good luck.
The mortgage market hasn't been functioning that way. And so I don't think that rate cuts will solve the housing market. The housing market has a supply problem as much as it does a rate problem.
Fascinating. On an eventful Friday, not boring to say the least. Damien Sassower with Ian Lyngen of BMO Capital Markets.
Ian, talk to us about the runway for continued dollar weakness. Is this really the end of King Dollar? I mean, how much lower can Euro dollar go? Can the dollar go here?
Well, to a large extent, it depends on how successful the administration is in balancing trade. Because if we actually have a balanced trade deficit, then there won't be as many dollars going out into the global economy to be recycled back into treasuries. At the end of the day, I do think that the dollar will remain the reserve currency. And if that's the case, there'll be a stabilization at some stage. But I'm very hesitant about wanting to go aggressively long the dollar, given all of the credibility issues that
But Ian, look at yields here in the U.S. relative to the rest of the world. I mean, they're high, and the carry trade works. I mean, it's still working this year, despite what anybody else would have told you coming into 2025. I mean, the carry trade works, and I mean, you're not funding in dollars anymore, are you?
Well, that's a fair point. The carry trade works, but it only works as long as you point out, rates are relatively high. When the Fed starts cutting rates, that should put downside pressure on the dollar, not upside pressure.
Yeah.
And the question becomes how much of that is priced in? And I think not enough.
You're pushing against, Ian, the panic of price down, yield up, and say the 10-year piece, even the 7-year as well. Do you still stick with a vector of lower yields out 18 months?
Yeah, our year-end call for tins is still 385.
Wow.
I think by 18 months from now, we could be closer to 350, 325.
In the time we got left with you, Mr. Lyngen, I want to talk about Canada. You've got a pooling of research at the Bank of Montreal. For those of you folks, 150 years ago, Bank of Montreal was sort of like the Bank of England of Canada. And Ian Lyngen, with all of your research capabilities, give us a BMO update on the impact of Trump tariffs on Mr. Carney and your Canada.
So it hasn't been good in terms of what the tariffs mean for the Canadian economy. We've already seen the Bank of Canada respond, would expect more. There's a lot of uncertainty. And I think at the end of the day, the relationship between Canada and the US will weather the storm, but it has been recast in a material way because of Trump's trade war.
Ian Lyngen, thank you so much. With BMO Capital Markets.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us now is people, and my people have been arguing for months about trying to get him in here. Lawrence McDonald joins us. He made waves years ago, a colossal failure of common sense. That was my biography. How to Listen When Markets Speak is the latest effort. Larry McDonald in the studio today. Great to have you here. And I want to go right to where Damien was. You had my essay of the year 2 years ago, where you walked through in about 12 paragraphs the wall of money that's out there. It hasn't changed, has it?
Well, you know what's fascinating, Tom? In the last 2 to 3 weeks, the RRP's coming down again, and we don't have that release valve that we've normally have had. So in the last couple of weeks, something has changed a little bit because that's the liquidity really juggernaut. Is the RRP. That's been the case for a long time.
What's the RRP for Lisa Mateo?
The Fed's reverse repo facility.
Oh, good. It's good to know that. I have no idea what that is, Lisa. So, just stay with it. It's McDonald. Go with it.
But, as a former Lehman trader, I just want to say, I tell my wife once a month, if we sell 1 million books, we'll break even on our Lehman stock, right?
Yeah, that's good. Yeah, thank you, Mr. Full.
But to get back to liquidity and Lehman and what's happening now, you're going to love this, Tom. We did an ideas dinner in San Francisco 2 weeks ago. And I was with some of the big family CIOs that run money in the Valley for the big AI type players. Ooh. And what they said was, when academics look at liquidity, they look at the RRP. The guys in the Valley that are tracking momentum, they track meticulously these 15 verticals of tertiary assets versus established. All that means in English is, say, ARK stocks versus the Qs, or say companies with 10 billion market caps and no sales. That's another one, right?
Is the money going to move? The wall of money that you identified, is it going to move?
Okay, so this gets back to my point. The tertiary assets the last 10 days have been starting to underperform established. Solana versus Bitcoin. So that tells you the wall of money is receding. And it also lines up with the decline in the RRP. So something's going on. Liquidity is drying up to some extent. This is just the genesis of it.
Well, Larry, I'd love to ask you what wine they were serving at that dinner with all the Silicon Valley types. But, we're not going to talk about California cabs. Total assets at the world's 4 largest central banks, I'm talking the Fed, the ECB, the BOJ, and the PBOC, has been in decline since March of 2022 when the Feds first started raising rates. But that seems to be declining. I just put out a deck this morning. I have a great chart in there. I'm tooting my own horn here. But it looks like central bank balance sheets are going to start expanding yet again. Is that a good thing or a bad thing?
Oh, my God.
Sorry, it was softball.
It's going to be it'll be a good thing if we're in a crisis, right? It'll be a bad thing if we're at this point in the cycle. Okay. It's going to reaccelerate inflation.
Larry, this is a good point. And folks, it's the Bear Trap Report. You can get it from Mr. McDonald's people. He doesn't talk to anybody by appointment. Larry, are we in a crisis?
We're in a situation where we're going to have a reacceleration in inflation, and that's going to create a crisis.
Mr. Sassower.
Yeah, FX reserves of central banks. Let's talk about that. We want to get into the plumbing of these markets, right? I mean, it seems that, reserve levels, at least you look at China, obviously, but broadly speaking, it looks like central banks outside of the U.S., they don't need to hold U.S. treasuries anymore. I mean, what else? Where do they go? Is there no demand for liquid, cash-like assets from central banks anymore? Is that declining?
Yes, and so we have less friends in the world. That's why Basent has been out there with the bag of tricks. So when you talk to, we have a business on Bloomberg, a Bloomberg chat with some of the largest hedge funds in the world. One of the things I've been talking about in the last 6 weeks is Basent's bag of tricks, where they're using a number of new facilities to try to replace foreign treasury buying. Because
what do those facilities look like? Like what else is there? Gold?
Well, forcing the banks to buy more treasuries is one, right? That's just to keep it simple. Yeah. But when you force the banks to buy more treasuries, in essence, that's financial repression. And the only way out of a 37, this is what we talk about in our book, How to Listen When Markets Speak. The only way out of a $37 trillion debt hole is massage interest rates below the rate of inflation, financial repression. That's very bullish for hard assets. That's why gold, Bitcoin, and platinum, palladium are starting to outperform. The silver miners, Tom, are up 62% this year versus the FANGs are only up 5%. Hard assets versus financial assets.
Why is the stock market up? I mean, it's a grind higher, but it's a constructive grind. And, earnings season, they're delivering the goods. But it's like 12 stocks are getting it done, and the rest are flat on their back. Our listeners, they're not as esoteric as Sassower or you. Our listeners and viewers, they're just like, okay, into the weekend, what in God's name do I do with my 401k? Speak.
Okay. First of all, if you look at the Bloomberg terminal, which I do 20 times a day, volatility in August and September, seasonally, it's a trouble spot. You want to be raising cash into for volatility. Probably the worst, or I guess the best month of the year is the VIX in August, right? The second best might be September. So for people listening to us right now, that's when you want to raise cash and you want to put money to work when there's real fear, like we had in April and last August. Last August, we had a very meaningful drawdown. And so you want to have raised cash and be there for the pain.
How do you build ballast in fixed income portfolios today? I mean, if no one's buying treasuries, and I mean, let's be clear, if you look at EM local debt, for example, which is, should be yielding way over U.S. Treasury, it's only 183 bips over U.S. Treasuries.
I didn't know that.
No, it's almost at one of its tightest on record. And so, I mean, if you look at EM U.S. 10-year spreads, I mean, 14 of 18 countries are well below their 3-year average. So, I mean, just thinking out loud here, what else do you buy?
Right. The EMLC, the Emerging Market Local Currency Bond Fund, is outperforming the TLT Treasury Fund in a 1-year, 3-year, and 5-year bucket.
There we go.
And that's that weakness in the dollar we've seen this year.
I'm almost out of time. Your charm is you have an optimism about the American system. People say, oh, he's gloomy in that, and it's the Friday gloom crew, except you believe in the system. Okay, what do we do after Trump? What does our financial system do after the day-to-day shocks that we receive from President Trump?
So that's what we talk about in our book, Tom. We're talking about a whole new portfolio construction. People have to get long a 1968 to 81 type portfolio where you're long companies that own assets. You're all kinds of metals, copper companies right now, the COPX is in the perfect spot. Globally, we're undersupplied. The artificial intelligence boom, Tom. We have a power grid in the United States that needs a $2 trillion rebuild. All of these growth assumptions.
Can you own Mag 7 this morning?
No, but I want to own the COPX because that's gonna give you the power to fund AI.
I know you sold the movie rights to the latest book. DiCaprio, is that what we're looking for?
Well, the latest book. Right now, number within the top 3 on Amazon right now. How to listen when markets speak. Top 3 again. By the way, I'm really proud, Tom. I've got 2 books right now. Larry McDonald, 2 books in the top 40.
Okay, well, that's good. Lisa Mateo's book's #1, A Gluten-Free Breakfast. Lawrence McDonald, thank you so much.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Bloomberg reporting, quote, Trump-Putin meeting in the next few days. Russia and U.S. agreed on the place for a potential meeting between the presidents, but won't announce it yet. We're here to break news. They'll be holding that at Dan Tannenbaum's summer place. He joins us now from Oliver Wyman. Dan, you're sort of expert on this. I mean, at Oliver Wyman, between you and Hugh Von Steenis, it's shocking expertise about inside baseball between the United States and Russia. What's your observation that would be the best thing for Mr. Trump to bring up?
Well, firstly, Tom, and we haven't planned for the meeting here yet, there isn't really a good reason to even have this summit. Let's remember there's been threat after threat that President Trump has made towards the Russian government, towards President Putin to cease hostilities, to work towards a ceasefire. They haven't done any of that. Today was actually supposed to be a day where the president was to announce sanctions, which, by my count, there have been 0 designations by the U.S. government with respect to Russia since Trump has taken office again. So to give this summit with Putin in the first place sends really the wrong message, because Russia hasn't done anything favorably towards ending the conflict.
Do we have leverage?
We absolutely do. I mean, it is ironic that the president has done more to hurt the Swiss economy than the Russian economy in the last 6 months. There absolutely is leverage. The focus on India, for instance, in trying to get them to stop purchasing Russian oil by using tariffs, which really will enrich the U.S. at the cost of Ukraine. There's primary and secondary sanctions that could be used on Indian entities to essentially threaten to cut them off from access to the U.S. economy, a far greater threat if the objective is to get them to stop buying Russian oil. So the leverage is there. The president hasn't done anything yet.
Dan, part of the president's strategy was to increase domestic manufacturing here at home. We know that Oliver Wyman, one of the most successful management consulting firms here in the U.S. And then I see your note and I look at this word and it quotes, empanada. Everyone makes promises and never actually does anything. Is that what you're telling clients right now? Empanada?
I'm not telling them. Another media outlet had actually coined that the other day. But if you think about it, some of the scale of these announcements of investment in the U.S. are fairly high. We haven't seen anyone really moving on some of these committed investments thus far. And from what we've seen, going back to the first Trump term, no one's really validating that these investments have been made good on. So it does seem like some of my clients, in an attempt to curry favor, to stay out of negative focus of the administration, are announcing deals. They may be serious about them, but when you see $600 billion investments over however long a time horizon, I'm not convinced that companies are going to make good on all of these.
This is Sakura Murakami in Tokyo for Bloomberg, folks. The Prime Minister of Japan is hoping to stay on as calls grow for him to exit. And part of it is because of the deal we did with Japan that's not in writing and open to completely polarized interpretation. I mean, there's no other way to put it.
That's the challenge. We have frameworks. We don't have specifics. Even on the tariff strategy, there's a 40% tariff on transshipped goods. There's no guidance out of the U.S. government on what even constitutes transshipped goods. So you take all of these together, there's still a ton of uncertainty for my clients, for the market, on what actually will be moving forward. And we've seen there's a tendency to pull some of these deals away, to readdress them going forward. So there's not really smooth air that companies are seeing.
So Dan, I mean, then correct me if I'm wrong. I mean, this effective tax rate that everybody's talking about, 15%, 16%, 20%, I mean, how are people coming up and actually calculating that with any confidence? Is it a range in your mind? I mean, is it 15 to 20? Is it 10 to 15? How do you look at things?
I mean, that is the challenge, is the movement is so great that trying to take a look at some of what this go forward taxes look like is complicated. What I'm looking at probably more closely are the losses that businesses in the US have been announcing in their earnings over the last few weeks, because that seems to be a bit more real as at least a looking backwards issue to try and go where ultimately companies may try and recoup some of these losses going forward in the form of price increases.
Right. Dan, if you do have the Trump-Putin meeting at your summer place, I would suggest the liquor manifest that I saw Churchill had at Yalta. I think that would be that would smooth things over.
Sure.
I don't have Diet Coke here and can't cook a well-done hamburger, so I'm not sure what my abilities would be to host.
Dan, thank you so much. Dan Tannenbaum and Oliver Wyman with Hugh Von Steenis as well. Just great perspective.
Too short.
There.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Arguably my academic paper of the summer, even though it came out 2 years ago. Joining us now from Harvard with all of the recent acclaim of the John Bates Clark Award, Stephanie Stancheva, her expertise in the taxation economics, her social economics lab. And Stephanie, this paper, which I absolutely adore, with Nunn, Shenoy, and Sequeira, is zero-sum thinking and the roots of U.S. political differences. This goes to a static analysis. It goes to almost a mercantilist thinking, and an eye for an eye, a tooth for a tooth. How do we get beyond our new vogue of zero-sum thinking?
That's a great question. And indeed, you're right to point out that what we show in the paper is that this zero-sum mentality, this feeling that if you get more, this means I must be getting less, that we live in a world which is a fixed pie. So if someone gets a larger slice of the pie, someone else must be getting a smaller one. This mindset has actually been increasing. You can see it in the US in the fact that younger generations today are much more likely to hold such zero-sum views than the older generations. And we can trace this back to the economic environment that people live in, which is also a way to think about potential solutions. The younger generations today have grown up in times with lower mobility, lower growth than the older generations.
Right.
And so at this macro level, this has really influenced their thinking about these issues. You can also see it at the individual level. We have people's whole family histories and ancestries in our project, and you can see that regardless of the macro environment, if your own family has done better over time, if you are doing better than your parents, you're also less likely to think in zero-sum terms.
Right. Well, the thing, Stephanie, that I find so interesting here, it's the romance of getting back to the economics and political economics of Benjamin Friedman, or over at MIT, Simon Johnson, the recent Nobel Prize winner. But the thing to me is, what is the prescription to get back to the optimism we created out of the Atlantic Charter in 1941, or is this what we have for the future, this zero-sum thinking?
Yeah, I want to be really cautious here because we're not saying that zero-sum thinking is necessarily a bias, or it shouldn't be dismissed as just a bias. In the paper, we show that it's deeply correlated to people's experiences. People who have zero-sum experiences, including in their ancestry, are much more likely to hold this mindset than people who have had positive-sum experiences. So it's something that's deeply rooted in people's realities. And this is something that we have to think about very seriously. So when we think about policies themselves can make the world more zero-sum, or they can make the world less zero-sum. It's rare to find entirely win-win policies, but there are policies that lead us more in a win-win direction, especially over the longer term. Research shows, for instance, funding for children, like the child tax credit. These are things that over the long run sort of pay for themselves in better opportunities, in better economic outcomes for those families. Innovation policy is something that we think can create win-win solutions, and benefit more people. So there's policies that can turn the world, into a more positive sum direction.
Well, Stephanie, I mean, the premise of this zero-sum mindset is the belief that, resources are fixed, that the pie is fixed. It's not a balloon that's expanding. I mean, I grew up, I was born in 1974, but I'm still a product of the 60s, free love, all that good stuff. So is Lisa from Leonia. But, the reality is this generation, the consequences of this zero-sum mindset, are they really that bad? Is it really breeding distrust, conflict, reduced cooperation, all of that?
So we can trace the link between zero-sum thinking and your policy views, if you want, and what you want to support. And one really important fact, which is pretty rare these days, is this is not a partisan issue. So zero-sum thinking is quite evenly spread across both aisles of the political spectrum. So it is not clearly a Democrat thing or a Republican thing. It's there on all sides. It's something that is more correlated with the more extreme ends of the political spectrum. And the type of policies it makes you support is, if you think the gains of rich people come at the expense of the poor, then you're going to support more redistribution, more progressive policies. If you think that the gains of immigrants come at the expense of non-immigrants, you're going to also be quite anti-immigrant, which goes to show it really, cuts across partisan lines here. You're going to be more anti-free trade. You're going to want to support, policies that really benefit your in-group or your own group more.
Well, Stephanie, President Trump always talks about, this is good for America, but can also be good for trade partners of America, win-win situations, as it were. I mean, is this zero-sum mindset, is there such a thing as a win-win situation?
There are win-win situations, I think. It depends on the horizon we look at things. As I mentioned, there's policies which today might cost money, so someone has to pay today, but over the medium run, over the longer run, they create more benefits that can, lift everyone. So it really depends on the horizon. And then I think it also depends on necessarily how narrowly we look at a situation. If I'm competing for a promotion at work, then in the immediate, this is zero sum. Right. If someone else gets the promotion, I won't get it. But maybe if I take a step back and think about how can we cooperate here, maybe there's a way, to make everybody more productive here and the company do better. And then I could also benefit from this. So not saying every situation can be win-win. And again, zero-sum thinking is very rooted in people's realities because they have experienced zero-sum situations. But I think policy has a role to try to push us towards more win-win solutions.
Stephanie, I got time for one more quick question. You're having a cup of coffee with President Trump. You're having 2 scoops of ice cream for dessert with President Trump. What would you say to the president about slipping away from a neo-mercantilist policy?
Well, to highlight basically the findings, I think, of this research is really that we have to push towards more positive sum situations. And while that's not always possible, policy is a really, really powerful tool. So it shapes the world. It has shaped the world. You can see through these generations that have experienced very different growth, very different mobility. And so I think this is a huge, a huge moment to try to create more win-win solutions and more positive sum environments.
Stephanie, thank you so much. Stephanie Stencheva at Harvard, and of course the acclaim earlier this year of winning the John Bates Clark medal, hugely advantaged. It's like, I think, under 40. Maybe it's under 70. I can't remember.
Oh, I mean,
I'm kidding. Oh. It's huge deal. Thrilled that she could be with us this morning.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Tom King, Damian Sassar, Lisa Mateo, fired up with a gluten-free set of newspaper stories. What do you got?
All right. Okay. Doctors are saying, I know you guys have dabbled in AI, right? Have you used the Chat GPT that much?
Of course.
Not too much?
Okay, I do. Okay. I love it. Yeah.
Well, doctors are saying there could be a side effect to using chatbots like ChatGPT. It's called AI psychosis. Very serious. Okay, so Wall Street Journal, what they did to find this out, they did a review and analysis of public chats that were posted online, okay? Dozens of examples where ChatGPT actually made delusional, false, otherworldly claims to users. And the scary thing is that people believed it. It's spitting out this information. People
They're
saying it must
working
be
on it.
true.
They got ChatGPT 5 is out like this week.
Yes.
Role playing.
It came out yesterday. Yes. So one example is that ChatGPT confirmed that it's in contact with extraterrestrial beings. So that goes to show you what's being out there. And the problem is that people keep writing back and forth. So then you have the queries and the queries and the queries. So it's like this rabbit hole and it keeps overpiling. And that's why they're saying it's like AI psychosis.
I mean, Axios did a great treatment on this today of Anthropic catching up with whoever in coding. But there's different AI, Damien. There's coding, making code. There's what Lisa's talking about, which is idiot stuff. And then there's I'm using Perplexity like a search engine. It's phenomenal.
Well, I just, the response that ChatGPT gives you, it's like, look, some of the, greatest minds of our in history were delusional. So you're doing the right thing by querying us about, cosmic aliens and whatever.
I couldn't get this through Google search. I typed into Perplexity last week, folks. When was the last time Damien Sassauer had back-to-back birdies? And there it was. Boom.
Well, now that my 60 is going to be back in my bag, we're going to get some.
There we go. Next.
Okay. TikTok. I know neither of you are on TikTok, but it is trying to attract.
Don't assume that.
Oh, Damien! Oh my goodness!
Sometimes I don't have a TikTok account, but I get sent a lot of TikToks, and
so did you might be able to use it to book your next trip to Argentina. Damien, you were just talking about this. Okay, so TikTok trying to attract users, drive e-commerce activity. Right, the new app. It says you can use it to book vacation because in the past, right, you would use it, you would scroll and you would see people's videos of these beautiful places, and you just sit and go, I wish I could go. But now there's going to be a link because they have a partnership with booking.com. Creators are going to make money off of it too. So all these creators who post these videos, they're going to be getting a percentage, a commission, or they can get a voucher. It's part of this program called TikTok Go. Ooh. So it's just making it easy for you to travel.
So if you can get Delta One access.
I will say this. The announcement of the week was the New York Times earnings report. Brian Weezer's shop at Madison and Wall, they said it was a stunning, game-changing report for why everybody's doing all this digital stuff. It's about making money. And the New York Times had a sterling report.
Yeah, because TikTok has the TikTok shop, which they're trying to, e-commerce. It's all about people clicking and
So what do you got next?
Okay, Formula One. I still have not seen the F1 movie.
Not me neither.
But okay, Formula
I'm upset
One
because they asked me to be the lead in that, but they give it to Brad.
Turned it down?
And me and Brad.
Damien, I'm sorry, you missed out on that one. Formula One Group, though, they've seen a revenue bump this quarter because of the movie. The Hollywood Reporter is saying Formula One Group, they saw a one-time revenue increase from the release of the movie late June, contributed to the group's 40% rise in revenue year over year to hit $1 billion.
Wow, $1 billion.
And the president of Formula One Group is saying, it's helping the popularity of the sport too because of the movie. It's getting excitement around it. A new generation too is getting excited about it.
Flow, and the latest thing I saw on this, John Farrell's the one that's really expert on this. Yeah. Is all of a sudden the drivers, they're like you, Damien. They're like celebrities. They're like,
Well, I mean,
and the girls are paying huge attention to this.
It's McLaren. I mean, it's Piastri. It's Norris. They're going for the drivers' come. I mean, they're neck and neck for it. I mean, and look, it's no longer Max Verstappen's world, right?
That's it. Very good. And they're on summer break now. We'll pick it up here in a couple of weeks. Lisa Mateo, thank you so much.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.